I think a lot of people have been saying that it probably will be a sell on the news event, but so many people are saying that now that I'm beginning to have doubts. We are seeing an anticipatory move, but the move of institutions into this new asset class, and that is what we are talking about here, a new asset class, which with another diversifier, institutions can increase their returns per unit of risk because of the low correlations. I think that's going to be very appealing. And if institutions with trillions of dollars under management just put 0.2 or 0.5% in, that could really move the needle. So we think the move has been anticipatory, and it makes sense.
Cathie Wood, CEO and creator of Arkansas Invest, has expressed a firm conviction that a remarkable and soon-to-be occurring event has the potential to swiftly catapult Bitcoin values to unprecedented heights, putting it in excellent position to fulfill her 2030 forecasts. Approval of a spot Bitcoin ETF is crucial to this occurrence, which is something that many are eagerly awaiting. Even Cathie Wood herself is anticipating it. In a recent interview with CNBC that aired on Monday, Cathie Wood discussed her thoughts on Wednesday's possible SEC clearance and how the launch of spot Bitcoin ETFs could spur massive institutional investment in Bitcoin in the future. With the SEC's approval, Wood is certain that institutions will start to put some of their money into Bitcoin, and that amount might grow substantially. The extraordinary amount of interest expressed by the SEC is the foundation upon which Cathie Wood bases her confidence in the approval of spot Bitcoin ETFs. She points out that the SEC's attitude has changed, saying that for almost 10 years, spot Bitcoin ETF filings were met with inexplicable rejections. The SEC used to just reject applications outright, but in the last year, they've started asking applicants thorough questions and asking for modifications when they need them. Importantly, contrary to what some may anticipate, Wood thinks that the approval of spot Bitcoin ETFs will not cause a sell the news event. So, according to her, strategic positioning has already started and big institutional investors are expected to pour money into Bitcoin in the next years. I understand. Recently, a scarcity value has emerged. It's going through a limited resource with just 19.5 million Bitcoin in circulation. There is a limit of 21, and out of the 19.5 million, 15.0 million are in very powerful hands. With 155 days passing, they still haven't transferred any Bitcoin. With the new funds in the US, 21 Shares has released 45 products, and they are enjoying economies of scale that we think will further boost the value of this spot Bitcoin ETF. So I'll give them respect for that. Institutions will benefit from this, thus it's heading our way. Institutions, in our opinion, are oblivious to this asset class. They've had plenty of time to examine it as it's been evolving over the previous decade or more. We have definitely released our research. We all own 21 shares. This notion that it is a new asset class will emerge, obviously, but I do think that we have some great ideas coming up. When you consider the interconnection between Bitcoin and other asset classes, it's helpful to recall the early 1990s and the internet. It wasn't it. Because they didn't think it would be possible, the developers didn't include anything to enable financial services. This is only finishing off the task. Additionally, we anticipate that incorporating that layer into the internet would lead to significant cost savings. Making as much money as possible with the spot ETF is not our goal. This will be especially true for our actively managed ETFs. However, we firmly think that this is a pivotal moment for us to assist in making Bitcoin accessible to a wider audience. Therefore, our principal goal in charging 25 basis points for the first $1 billion or providing free access for 6 months is to cover these costs. At first, all we did was you put in their marker. The industry's fate was completely unknown to us. But as our ideas developed, we thought, hold on a second, this is a unique opportunity to declare that this is a public good. The technological equivalent of a financial superhighway, a global monetary system, or a mega project, as a failure had previously suggested. We also wanted to clarify that one of our goals in communicating with you is to make this feel accessible. The first 6 months are on the House and a UN. Could additional institutions get involved with a spot Bitcoin ETF? Sure, to cut to the chase, yeah, rappers are these people. Since they're accustomed to them, people realize They are compatible with the systems they already have in place. In my opinion, that is a crucial component. I believe that futures products, which are definitely marketable, have a reputation for being more intricate than other types of products. For that reason, I believe there has been some further reluctance. If you're looking for something a little more subtle in the crypto space, these are about as subtle as it gets. Additionally, I believe that simplifies things somewhat. The role of advisors is to manage their clients' money and provide them access to high-quality products. So I think it also removes some of the regulatory uncertainty around these products, assuming these things do move forward and get approved. In my opinion, removing some of the regulatory ambiguity can greatly enhance accessibility. They have helped several of our clients. Should conduct additional research when these ETFs are released and they see the zones and similar documents. Accordingly, we anticipate a solid foundational push and a solid institutional construct. One of the most crucial factors to consider in the upcoming weeks and months as individuals begin to research and potentially include these products in their portfolios, with the hope that they meet the AM expectations, will be the quality of these products' construction and structure and their ability to withstand these demands. I mean, we've had these kinds of items going for around 5 years now. In a great many respects, they differ slightly from one another. There is a noticeable change in the way safety, security, and operational infrastructure appear. And I think one of the things that will be fascinating to watch in the next few weeks and months is how that translates to these audiences and investors when they enter this sector for the first time and really grasp all the intricacy.